Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
All right, today we have Matt Aitchison with us, and he is from Roseville, one of the native people from Roseville. Those that don't know Roseville, it's outside of Sacramento. So, Matt, it's great to have you. I'd just love to hear kind of your origin story of growing up in Roseville and ending up as a real estate entrepreneur.
Well, it's great to be here with you, Bruce. I was, born and raised in Roseville, California, which we were just kind of talking about. It was considered a small suburb of Sacramento. Now it's really its own city, and tons of growth and development happening in this area. I went down to school at UC Santa Barbara for 4 years and somehow made it out alive with a very expensive piece of paper. And, moved back up to, I got my kind of first exposure to entrepreneurship. I'm the first entrepreneur in my family on both sides. And I was working down at a little insurance firm while I was going to school, kind of worked my way up as a cold caller for this guy, became his right-hand man. He wanted me to kind of take over his book of insurance business. Wasn't really something that I was passionate or excited about, but I got the exposure to the entrepreneurial lifestyle, and the, kind of entrepreneurial bug bit me. I moved back up to Sacramento, and I was, getting interviewed at all of these places for $30, $40, $50,000 a year. And it just didn't align with the vision and the goals that I'd had for myself. And my mom had been taking me to real estate investing seminars when I was like 12, 13, 14. My mom was kind of the one who always had the passion and drive to become an entrepreneur, but worked in corporate America her whole life. But fortunately, I was getting to go to some of these events with her. And I remember seeing people up on stage flashing these big checks and talking about real estate and wealth building. And, when I was thinking about my career, I wanted to be able to help people, have no ceiling of, financially what I could achieve. Wanted to be my own boss, kind of have the lifestyle design. But I also wanted to be in a career path that allowed me to build wealth. And so real estate kind of checked all those boxes. And in 2010, post-financial crisis, I was on Craigslist of all places. I saw an ad, real estate mentor seeks real estate mentee, which I later found out means work really hard for free for me. And I was helping this guy buy houses off the courthouse steps. There was a lot of foreclosures in California at that time. So I helped him flip, about 100 houses in a year. I didn't make a dime. I saw him making 50, 60, 70 grand a check. I was doing all the project management, all the disposition. And over time, by being in proximity to this person, I got the confidence to go, man, I think I can do this myself. So long story short, that led me to buying my first flip when I was 21 years old. It was literally the neighborhood cat lady house. There was, I think, over 100 stray cats in this home when I bought it. Hoarder's house. I ended up netting $106,000. I funded that 100% using other people's money. I was still living at home with my parents, on credit card debt, barely had any money. And obviously I was working for free, so I wasn't making any money. And that was the big light bulb moment for me where, at 21, never bought or sold a house in my life. I funded it using a hard money first and a private money second, paid them all off and still made $106,000 and went, whoa. Creative finance. If you can find a great deal, the money will find its way to that opportunity. If you've got a good plan, a good team, and you can execute accordingly. And that led me to, flipping a couple hundred houses over the next 5 years. And then I realized very quickly that, flipping is just another job. So I need to figure out how to hold some properties in order to generate some cash flow. So I started building up a single family portfolio, flip 2, hold 1. I did that. Then I realized, man, I'm only clipping, $200 a month on these doors. I'm going to need a lot of doors in order to get to the financial, goals that I had in terms of passive income. And that's really what turned my attention over towards commercial real estate. I bought my first shopping center. And understood kind of how this net operating income and cap rate game works. And I can force value by doing a couple levers that I can't do on single family. And so I really went all in on commercial real estate. That led me to buying my first hotel, then my second, my third hotel. I sold those and rolled that money into medical office buildings and additional shopping centers. And so my portfolio kind of consists of a variety of different commercial real estate asset classes. Right now, mainly focused in shopping centers, medical office buildings, and boutique hospitality.
And what geographic area?
I'm across 4 states right now, looking to enter 2 more states. I'm more of an opportunistic, I would say I'm market agnostic and sometimes asset agnostic, depending on where the opportunity is at. So most of my stuff is in California, Kansas, Oklahoma, and Nevada.
Nice states, great states for increasing value and so forth. So give us a little criteria for what you look at when you're looking, say you're looking in Oklahoma, what do you try and find?
Yeah, more so, I don't necessarily go hunting for the deals. The deals come to me based on the lines that I put in the, theoretical ponds, which are really brokers. We do, text and cold outreach in terms of cold calling. And I've got, certain criteria that I look for. But most of the assets that I buy and ultimately what drive and dictate the market I go into are the location, the asset, and really the opportunity and the numbers on it. And so being a value add guy, being an opportunistic guy, most of the states that I've landed in have been from brokers or bird doggers or wholesalers or people that are in my, social media network that kind of know, like, and trust me, that consistently bring me deal flow. And for example, this, 80,000 square foot shopping center that I'm redeveloping right now was brought to me. They wanted to sell it to me for $3 million. I offered 900. A year later, we settled at $1,060,000 at $12 a square foot.
Oh,
and I now am taking that through with doing a build out with TJ Maxx and working through with some other national tenants to kind of fill that, deal up. But because of where I was getting it in terms of the economics on the model, I like the demographics of the city and the area that the asset was located in. That took me to Oklahoma. I wasn't necessarily looking at Oklahoma right out of the gate. That's really happened in Kansas. That's happened in Nevada. So most of my stuff is more so of not being a secret investor. I'm very vocal with my podcast, with my online, social media brand, and letting people know what I do, what I'm looking for, what opportunities or dots I'm trying to connect, and just consistently trying to bring value to other people, and give people a window into who I am, what I'm doing, what I'm looking for. And that is somewhat of a, after doing it for 15 years, that's been a, somewhat of a learning and long tail process. But, like a farmer, I'm a long-term thinker. I plant seeds, I nurture those seeds. And I know that over time, if I'm disciplined and diligent with what goes into fielding and yielding a good crop, that process is going to, generate me something. And so, here I am 15 years later, and some of those crops, some of those relationships and those seeds that I've been nurturing for many years are starting to, yield and produce results, which kind of directs what direction the wind blows me on my deal flow.
So what would you say you wish you had known 15 years ago that you do know now?
I would say skip single family altogether and go straight to commercial. There's a great quote by Steven Schwartzman in his book. He's the founder of Blackstone. Great book if, one, you're a commercial real estate investor, but just anybody that's honestly a business owner and has big goals and dreams for themselves. It's got some great motivational stories and components in it, great leadership. And he said, it's as easy to do something big as it is easy to do something small. So you might as well go after the things that really light you up, really challenge you. And, when you think about the timeline of us human beings being here on this planet, that, I think the last scientific update was that the planet is 8 billion years old or something like that, right? So when you think about our little 100 years or, on average, 80 years for most people, it is such a small blip in the radar. We're just such a small, speck of dust in the ether of this timeline. Like, why not go after something big? And so that really kind of gave me permission and courage to, go chase commercial. And, the bigger deals oftentimes I've found are easier than the smaller little dinky deals. They just have maybe another comma or a zero in front of them. But that's something that, looking back, start my journey over again. I wish I would have just pulled up a seat to the commercial real estate table, being that if you're pulling up a seat to any table for the first time, there's going to be a learning curve. And so the learning curve in single family is going to be just as much as the learning curve in commercial if you're starting from ground zero. And I wish I would have pulled the seat up to the commercial table a little bit faster.
So how many investors do you have with you now?
Well, most of my deals are either by myself or just one partner. I do not syndicate my deals. It's something that I've looked at and explored doing, but just haven't had the need to, syndicate on a large scale. But I would say, over the course of my years and taking deals full cycle, I've probably got anywhere from like 10 to 12 key partners. But through my podcast and, raising capital over the years, I've probably got about 800 accredited investor LPs that are verified and engaging and interacting with me and looking to place capital in deals depending on what the opportunity is.
So how much do you leverage out your purchases?
Oh, I mean, most of my stuff, again, is very opportunistic and generally very distressed. So when I purchase a deal, I mean, oftentimes, I'm generally never going over 70% LTV. I like to be in the 50 to 60% range if possible, depending on what the game plan is with the asset, and what, leverage is required, and what that kind of, timeline is. I generally am in that 60 to 70% range. So, not too far off of what the normal run of the mill on a commercial deal would look like.
Are you finding money harder or easier to find these days?
Oh, I would say it's still out there, but it's much more selective. I think the capital stack structures have definitely tightened up and become a little bit more challenging to make the economics, pencil on a lot of these deal models, because of debt, lower LTV, higher interest rate, more covenants, more reserves, a little bit more teeth in it that make things a little bit more challenging to get equity on board to, feel comfortable with some of these structures. But, knock on wood, because of most of the deals that I do are very distressed and undervalued, well below replacement cost with really good, and most of my stuff is walking into cash flow day one to mitigate some of that risk with a nice, healthy, value add capture on the back end, which juices, the IRR, and it still gives me the ability to, spit some quarters out of the machine along the way to, make investors happy. So I haven't had too much challenges, but that being said, it's required more creativity. And I say, in challenging, stale, choppy, volatile markets like this, personally, these are my favorite markets. I came into one in 2010. And I'm a believer that resourcefulness is going to win over resources all the time. I know a lot of people that have all the resources, but they can't find opportunities that I'm finding because of my resourcefulness. So I think that in markets like this, I call it the season of seller finance. I'm closing on a mobile home park next week. That's 100% financed.
Wow.
And, outside of my appraisal fee and some of the closing costs, I'm coming to the table with nothing, and we're walking into cash flow with upside day one.
Wow.
So I think I'm a big believer that, and why I love commercial real estate is you can get as creative as you want to. You can get as creative as all of the minds and parties at the table are willing to get. And if we can all come together collaboratively and find a way to make what you need work and what I need to work, and we can find a way to structure that in a deal, there's a lot of ways that you can get creative right now if people are willing to do that at the table. It's been challenging, obviously, on a lot of fronts for many people because they don't, one, look at it through that lens. I'm always a creative lens guy first, a traditional structure second. And I think leading with that front foot, gives me the ability to ask the right questions and look at deals a little bit differently on how the capital stack can be structured to create a win-win for everybody. And that's how I've been able to get some of my deals across the finish line.
So how are you handling property management?
So some of my assets are third-party property managed, depending on the type of asset and type of lease structure and location wise. And some of my assets we asset and property manage in-house. So we've got systems team in-house for that stuff, and then we obviously lean on and leverage with other third-party property management experts that are local to the assets that we believe are going to be able to do a better job than we can.
What property management software do you like?
I don't use a property management software. I'm an Excel guy. Yep.
Spreadsheets in-house?
Yep. Spreadsheets that we have built out, most of our stuff, we've looked at the AppFolio, the door loops, all of them. And while they look sexy and, they're robust enough to handle and do all the things, the reality is you don't need to overdo a lot of this stuff that people think you need to overdo and to have a lot of this stuff. So, to be totally frank, we manage all of the assets. We manage all of the leasing. We manage all of the books. A lot of that stuff is all done either out of QuickBooks or out of Excel, and it works just fine for us. Not sexy, not as robust as some of these softwares can be and provide, but from a bare minimum of what we need, great communication, clear systems and infrastructure that allow them to do what they need to do and you to do what you need to do, and to keep those lines of communication open and make sure that checks are getting collected and issues are getting addressed. It doesn't need to be an overcomplicated system.
So do you use a lot of online payment for rent? How do you handle that part?
Yeah, we're a very tech forward, tech friendly group. So our tech stack with a lot of our stuff is all, automated invoicing that they can pay online, or they can, ACH, that they can use a credit card. A lot of those things are all automated and invoiced online. And anybody that wants, send in a paper check, here's how you do it. A lot of what we, do is reset the table when we come in and own the assets, and recalibrate through our tenant handbook. And here's our process of how we do things. And here's what we expect of you. Here's what you can expect of us. Let's create a great win-win relationship going forward. And, when you lead with that foot, and oftentimes you do have to, I always tell my kids this as I tell my team regarding our tenants, you got to teach people how to treat you. You got to teach and train people how to work with you in business, right? So, that's, I think, something that requires a little bit of a proactive approach. Of course, there's always some learning curves and some failing forward moments in some of those transitions. But for the most part, once you get those systems and processes in play, it's pretty seamless from an operational standpoint for us.
So you say how many folks have you got working with you?
There's 6 in-house, and then, we leverage a lot of consultants and vendors, but in-house, on the team that work with me, we're pretty lean for the most part, I would say. And a couple of those are VAs, but in my office here, there's, 4 of us, and then we've got 2 virtuals that provide additional support as virtual assistants.
Yeah, no, I mean, virtuals are great. We use them all the time. How are you finding your virtuals?
I've gone through different, let's call them companies that,
Right.
Are somewhat stateside and have all the relationships internationally. I've also, done our own, there's, a handful, I'd have to pull up what the links are, but there's a handful of different platforms that are direct to VAs that don't necessarily do the vetting for you, that don't do a lot of that stuff, and that's up to you. And so, I've scraped and scrubbed my knees through that process before. And then, when you find an A player, right? A players know other A players. So the 2 that we work with are, have come from referrals through people that we've built relationships with long-term, that have other kind of, hired guns that aren't necessarily working through an agency. And most of the people that I work with have been with me 8, 9+ years. So we've been able to have good retention when we find the good ones. And everybody works through challenges of, identifying and acquiring and retaining quality talent on your team. But we feel pretty good about, what we've assembled thus far and where we're going.
Hire fast and hire slow and fire fast.
Yes. Yep. Exactly. Yeah. I've done the opposite and paid the price for that. So, a lot of these cliched statements that we've heard regurgitated so many times now online through just the presence of social media and YouTube and podcasts. At the end of the day, as much as we might get desensitized to hearing them over and over again, oftentimes they are so true and so factual. And so I try and make sure that I'm checking myself and remembering that a lot of these things have been around for a reason and are what they are because they're true. So that's another one of those good ones that hire slow, fire fast. I've made the mistake and I've learned okay, that was true. I should have been a lot slower in my process, and I should have been a lot faster in pulling the ripcord when I see things that are totally out of alignment with our team and our values.
So what do you think the future's looking like these days in terms of commercial real estate?
I think there's definitely headwinds. If you're just looking at the overall market cycle, the 4 phases of an economic cycle and the 4 phases of, a real estate market cycle, I think certain asset classes are in different aspects of the cycle right now. And also different markets are in different aspects of the cycle right now. I think, I'm very bullish on retail long term. I'm very bullish on, obviously multifamily's had some major challenges and headwinds, and, there was a major supply delivery over the last few years of units coming online and, rents flattening out a little bit. Obviously, interest rates have overall impacted the, values of asset classes across the board and cap rate expansions and, making things a little bit more challenging. But I'm pretty bullish on the future of commercial real estate. I mean, I think in every bear market, there's always a bull opportunity somewhere. You just got to be creative and, again, resourceful of how you find those things, how you mitigate your risk. I was a guy that when everybody was blue sky and rose-colored lenses on pro formas and assumptions, and no way will rents plateau and they're going to keep climbing year over year, and no way will cap rates expand, and no way will interest rates be at 7%. I was the opposite, and so I do believe that if you make your money on the buy, right? So if you're mitigating as much of your risk on the front end with very conservative modeling and assumptions, and your deals still work, if those things happen, you can weather the storm. And we all know that, it's the people who can ride out the storm and get on the other side are the ones that don't end up getting caught, with their hands in the cookie jar and crushed in the process. And right now we're seeing a lot of multifamily syndicators and other syndicators in general who, modeled aggressively and had blue sky scenarios. And now all of a sudden they're, not only doing capital calls, some of them are handing keys back, some of them are ending up in lawsuits. And so, my biggest thing is I don't always need to win big. I just need to make sure I'm not losing. And as long as I can, because I'm a crock pot over a microwave type of thinker in terms of I plan on doing this until I can't hold a pen and figure out how to structure a deal. So as long as I make sure that I'm protecting my downside and we're finding ways with good team, good plan, good assets, good markets to capture upside, and I can do that consistently, singles and doubles put points up on the scoreboard as well, right? You don't always have to hit home runs and grand slams as much as I like to. So I think if in choppy, volatile markets right now, you got to really stress test deals. You got to really protect your downside. And if those things don't happen, great. You're going to have icing on the cake and be crushing it. But if they do, you're protecting your interests, your reputation, your brand, your assets, your investors. And I think this is the season that you really got to do that right now. But I do hope, and we saw obviously the Fed meeting today, depending on when this airs, they're pausing on interest rates again. I think the market right now has 2 baked in. I think maybe we'll get 2, depending on where tariffs and CPI and all of this stuff shakes out on the back end of the year. A lot of that is still TBD, right? And so that could mean a pause altogether. That could mean we, get some rate relief, or that could mean that, who knows? I mean, we've seen crazier, right?
Well, you throw in a war with Iraq and a few other things. Who knows what's going to happen?
Right.
But it's a wild world out there right now.
Yeah. Yeah. I mean, I think I try and just make sure that I'm not buying and selling headlines, and I am making decisions based on decades, not short-term windows. Because as we have seen, Trump says one thing, Elon says one thing, you see Tesla's stock drop 14% in a day. You see the stock market, drop, right? So like, again, those are things that are variables in the equation. You do have to be somewhat in the know of these things because they can impact you. But at the end of the day, I'm a perma bull that mitigates my aggression based on some of these variables. And so I just try and track data and let data be my driver, and try and remove as much emotion as possible, because there's been a lot of people that have been saying they were going to sit on the sidelines and these things are going to happen. And what if this happens? And 2-3 years go by and I've done some pretty amazing deals and none of those things happen, and they're sitting on the sidelines missing out on those opportunities. So obviously you got to, be cautious and do what you feel is best aligned with you and your goals and the timeline that you want to achieve those things in. But it's, I try not to get too high, I try not to get too low.
Yeah, well, I think it's definitely a time to buy. The biggest factor there is that interest rates are high, but you still got to go after it, I think. And certainly there's some great deals happening out there. So,
right.
Well,
Yep.
Matt, it's been great talking to you. I look forward to talking to you again in the near future. Where can people get a hold of you?
They can always listen in on my podcast, Millionaire Mindcast, every single week. If they want to connect with me on social media, at official Matty A is my handle, official Matty A, Mattya. That's a quick and easy way. Or they can just head over to my website, Aitchison.com. Email is matt@mattaitchison.com. Pretty simple. And it's been a pleasure connecting with you, Bruce.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.